Hello and welcome back. I'm Natalie MacDonald and you're watching Dukascopy TV. Joining me in the studio now, I have Bob Pillar, owner of Aupres Consult and also lecturer at Geneva School of Business Administration. Bob, thank you so much for popping in and seeing us today.
Well, thank you very much for having me. Great pleasure to be here.
You're very welcome. Now, last time you popped into the Dukascopy TV studio was shortly after commodities trader Glencore's went public in a much hyped $10 billion flotation deal. 2 years on from the IPO, what has the long-term performance been for Glencore?
Well, a lot has happened. The big thing, of course, their IPO was actually the preconditions, it turns out, for their merger with Xstrata, the mining company. And that was a target that Glencore had on their sights for some time. And so I said, one of the perhaps big motivator for the IPO. So the merger has happened. And timing is everything. The merger happened perhaps, people were talking about at the time that would probably represent the height of the commodity markets, and there seems to be some truth to that. Share price at the time was, the IPO was 550 pence, and now it's down to 325. So not a good performance. Question would be, is it a better performance than some of their competitors? And there's some evidence for that. But basically, reflecting commodity markets, it's been a tough couple of years. Oil prices have been flat. There's been very little volatility that Glencore's oil trading could take advantage of. Iron ore is well down at the moment, as well as coal. So these are important elements for the company and for the mining operation. And that is certainly related to the slowdown in China.
Last time you were with us also, you mentioned the discreet nature of trading companies. How has this changed and shifted, particularly if we consider the much publicised appointment of Glencore's first female director?
Well, I think that shows the effect of being public now. So shareholders certain shareholders put pressure on that, and Glencore was highly criticized for that. So they have to respond. I still think that Glencore will be unique. I don't expect the other large trading houses to go public. They prefer to remain discreet. However, having said that, there's been a huge sea change, and I think partially because of Glencore's IPO and just the size that many of the larger trading companies have become. So people such as Vitol and Trafigura, and has attracted attention to the industry, to that sector in a way that has not been the case before. So very difficult for them to hide now, very difficult for them to be discreet. So they have to step forward, and I think we're seeing that they are step forward and becoming a bit more public. Trafigura has even issued their financial statements, even though they're a private company. So yes, a big change, a big development as far as that goes. They can't run and hide.
Switzerland is presently considering a change to regulation regarding payment transparency for commodities traders. And this is following in the footsteps of the US and Europe. Walk us through your thoughts on this matter.
Well, I think, again, there's a momentum there, and Switzerland is waiting to see what the final regulations will be, and they will react to that. But having said that, it's become a topic, again, that is much more at the surface. The commodity trading companies will have to respond to that the best they can. But when this transparency about payment is really about transparency about payment to governments. And when I was looking at some of the proposals, for example, for the US regulations, it seems to be focused on publicly quoted companies. So most of the traders are not publicly quoted. So again, and I think the EU is again a bit different. So as usual, there will probably be differences in how the regulations are drafted, and then we'll have to see how the Swiss react to that. But the basic issue is, yes, about disclosure of payments. Commodities is a difficult area. Tremendous amount of corruption in emerging markets around commodities, so people want more transparency. Personally, I don't think that will go far enough. I think the real key is to get governments, on the one hand, is to disclose how much you're paying the government. On the other hand, the issue will be how much is the government receiving. So until the governments are actually divulging that side, the flip side of the coin, I'm a bit skeptical as to what that will ultimately really achieve if governments are not, say, doing the other side of it. And I think an easy thing that could happen is, rather than paying the governments directly, I can imagine governments in emerging markets having companies, their own national companies, intervening, locally domiciled companies intervening, such that the payments are going to a private company, which wouldn't be reported, and then whatever payments are going to the government. So I think you have to have both sides. I think one side wouldn't be sufficient.
Moving forward then, what in your view are going to be some of the drivers for commodity trading companies? And similarly, in your view, just how far reaching could the shockwaves be from this China metal probe?
Two different questions, I think. I mean, certainly the commodities trading sector is undergoing a tremendous change, and then really a lot of things are happening. Some very big themes of running from the shift in trade flows to the east, so the rise of Asia, and as you mentioned, the rise of China having been a very dominant feature. Almost every commodity these days seems to be, their performance seems to be related to China, and the rise of Asia, and that'll probably be a theme going forward. Regulation, as you mentioned, the payment transparency, these sorts of things are trends which will continue. So there's a number of things, and also the consolidation in the commodity trading world is an issue. Some people are believing that these companies are becoming themselves too big to fail, and should they be regulated more like banks are regulated? So those would be issues that the industry has to address. In terms of the metal financing scandal that's emerging in China, it's a bit too early to tell how extensive it really is. But certainly there have been banks finance, really a trade finance issue. And trade finance is, at the end of the day, about financing, much about financing commodities in emerging markets. It's really a question of fraud. And fraud is the biggest risk in trade finance. The idea that companies will pledge several times over their collateral in order to raise money is not a new story. That's happened before. It's one of the biggest causes of losses for banks in this sector. And the question will be, well, to what extent has it happened? It does raise questions about because gold has been involved, copper as well as aluminium. It does raise a question to what extent have imports into China have been exaggerated because companies were bringing in these metals in order to use them as collateral to take advantage of interest rate arbitrages between foreign, dollar-denominated loans and local interest rates. And so that could be a question as to exactly what the real demand for gold has been. The Chinese have been importing a lot of gold, but will that start easing off? So will that have an effect on the prices of these metals? Again, it seems that the indications, and right now it's focused on the port of Qingdao and certain areas of the port. So again, it's still a bit early to see exactly how extensive this phenomenon will be.
Bob, thank you very much for coming in and sharing your insight with us. Thank you.
Oh, thank you very much for having me here.
No problem. That's all we've got time for right now, but we'll be back with plenty more exclusive interviews for you here at Dukascopy TV. Goodbye for now.